Uranium price in the last few days broke above $50 again. So perhaps it's time to have a look at uranium. While holding some substantial positions in uranium together with the members at myfinanceteacher.org, I haven't really looked at uranium price closely enough for quite a while, as we've been waiting for a cycle low. Over the last couple of weeks though, uranium price has rallied from around $48 to about $50 right now. There is a pretty good chance that the cycle has finished and we have started the rallying phase of a new cycle. So looking over the last several years back to the middle of 2019, this is how uranium cycles look like. Usually they last for just under half a year, but this duration ranges quite a bit from 104 days to 249 days since the middle of 2019. The previous cycle was a little bit longer than usual at 196 days. And looking at the history of cycles, every cycle rally has the price break above the 50-day moving average and the 14-day RSI rise by at least 20 points to break above the neutral level of 50. And every cycle decline brings the price back below the 50-day moving average and drops RSI by, again, at least 20 points to break it below the neutral level at 50. So these are some of the ways of trying to identify these uranium cycles. Recently, in the middle of December, we saw this local low, which might have been the end of the previous cycle, giving us a cycle lasting for 150 days. That's a little bit shorter than usual, but pretty close to an average. So there is a pretty good chance that the cycle had finished. The RSI had dropped all the way from oversold to a slight dip into overbought at 29 over here at the very local low. Since then, RSI has risen by well over 20 points and it has already broken above the neutral level, while the price hasn't really moved that much yet, so there is still quite a lot of potential here, in my opinion. But remember, this is not investment advice and nobody knows the future. So share your opinion down in the comments below. Let's have some exchange of ideas, which might be beneficial to all of us. So as I say, there is a pretty good chance that we have seen one more cycle lasting for 150 days, finishing at the middle of December. Since then, we're only around 3 weeks into a new cycle, and with cycles usually lasting for around a half a year, we probably have 2 to 3 to 4 months of a rallying phase of this cycle before the price tops. So all of the potential is still there in uranium. While I do have a comfortably large position in uranium, I have been waiting for some confirmations of a new cycle here to add a little more. So that's perhaps what I'm going to do relatively soon. Let's have a look at URA. We see that URA is confirming a new cycle. We see a relatively strong rally just over the last few days. A bit of a retest of this 200-day moving average, having broken it. A successful retest, as we see if I switch to hourly or a 4-hour chart. It will be a bit easier to identify this retest. A rally above that 200-day moving average, which was somewhere around 21.2. A retest, decline down over here in the short-term intraday, down to that 200-day moving average, followed by a bit of a bounce in prices. While there is a bit of a risk of this gap filling in the short term before the rally continues, on the other hand, if URA gives us one more sign of a rallying phase by breaking above this mid-November high, that would likely be just one more confirmation that a new cycle has started. In that case, having uranium follow and break above its 200-day moving average might actually push the producers' prices even higher, as even during this large consolidation area, a bit of a triangle, every bounce in uranium producers, that's URA, even within this consolidation area, has averaged by around 30%. The average of these 4 bounces gives us 30% gain. Within this new cycle in uranium, I think there is a pretty good chance that this consolidation area will finally be broken on the upside, and even just an average of 30% gain over here brings this URA pretty close to $25. And lastly, I want to have a look at a sentiment in uranium industry. One way I look at the sentiment is by the ratio of producers to uranium price itself. When the ratio is below 0.4, that's usually when the sector is oversold. When this ratio is above 0.7, that's usually when this sector is getting a little bit overheated. We've talked about this chart several months ago. Looking at the updated version of this chart, we see this ratio bounced from 0.37 over the last several weeks to 0.44. So we're still not that far off oversold. There is still a lot of potential to move closer to overbought around 0.7. There's a lot of space over here that the chart can acquire, perhaps over the next couple of months. So while this is not an investment advice, I personally will likely add to my uranium positions. And for more details on uranium, on energy, general stock market, precious metals, cryptos, and other assets, such as some unique opportunities, some of which, by the way, have more than doubled in about a month, join us at myfinanceteacher.org. And I would also appreciate it if you give this video a like and share it with your friends. Have a nice day. Bye-bye.